All right, welcome to Lesson 2 of the VectorVest Successful Investing Quick Start course. It's great to have you back on this journey. Let's do a quick recap of what we did in Lesson 1 and where you should be right now. In our first lesson, we focused on the first secret to making money with VectorVest, and that's to keep it simple. You learned how to analyze any stock and how you could do it very quickly. I always say you can get a complete analysis in less than 30 seconds. And you could do that by using our indicators of value, RV, RS, RT, VST, stop, and the recommendation. In addition to being able to analyze any stock, you should also have built a watch list of your stocks. If you don't currently own stocks, you should have built a watch list of stocks you have owned or stocks you're currently interested in. You also learned how to avoid taking advice blindly from the gurus on TV. Instead, do the analysis yourself using VectorVest. If you hear about a stock, you now have the tools and knowledge to get a complete analysis of it using the indicators in VectorVest. Today's lesson is extremely important, not only because of the content we'll cover, but because we'll talk about something that 70% of investors say is the most difficult thing for them. The big idea of this lesson is to show you how to weed the garden. In other words, you'll learn when to sell those low performers. You've got to know when to cut ties with those losers in your portfolio, because if you don't, those stocks can sometimes turn into huge losses which destroy your portfolio. So here's the game plan for today. First, you'll learn a simple yet very effective way to identify those low performers. After that, you'll learn one part of the second secret to making money with VectorVest, and that's to read a graph. I'll give you 4 tips to determine when to sell a stock. These are things that once you know them, you can do in just a few minutes. Once we do that, I'll detail the 2 main money management guidelines you need to follow. This will ensure your portfolio can survive those tough times. And then we'll finish up today with action items for you to take. All right, let's get right to it. Earlier I said that 70% of investors find selling a stock is the hardest thing. Why is it the most difficult? Well, have you ever said one of the following things? I know it's down now, but it'll come back. Or, it's already down 20%, I might as well hold on to it now. Or how about, I have a profit, but if I close now, it'll probably keep going up. Or, I know I lost more than I thought, but if I close now, it'll probably go up tomorrow, so I'm just going to hold on to it. Or, the last time I sold a stock, it kept going up, so I'm not going to sell this one just yet. These statements right here are all emotional statements and most likely lead to poor results. These are examples of frustration, fear, greed, despair, and hope. If you're thinking any of these things before a trade, during, or after your trades, you might as well just burn your money. The key thing is emotional trading can kill your portfolio. Think about it. What happens when our actions are based on emotion? Think about the person who has road rage. What do you think about the decisions that person's making? Are they the same decisions he would make otherwise? A lot of those emotional statements that we looked at cause you to make a big mistake, which is why I list it as the big mistake you need to avoid. You need to avoid holding on to losers too long. Today, you'll learn how to avoid this mistake. The way to avoid that mistake is to be non-emotional and have a systematic way to manage your stocks. So let's learn how to weed the garden. Remember, you should have built your watch list already. If you haven't, just pause this video and go do it. Once you have the stocks you own in a watch list, the first thing you need to learn is how to identify those low performers and decide if any stock needs to be sold. So let's get right into VectorVest and I'll show you how to do that. Okay, here we are back in VectorVest and we're looking at a watch list of stocks. In Lesson 1, you learned that the stocks are sorted by our master indicator, which is VST. Now remember, that's one great way to keep it simple, because you've got the stocks with the best combination of value, safety, and timing up here at the top, and the ones with the worst combination down here at the bottom. So if you want to keep it simple, you can start to just weed out the ones down here at the bottom. Now to take it another step further, this initial sort of VST is fantastic when analyzing stocks to buy. Now once you own a stock, you're probably more concerned about the price of your stocks, because you want to know if the stocks are trending up or trending down. And the best way to know this is to resort your list by this indicator right here called RT. Remember, relative timing looks at the short-term price trend. So just by clicking on that column, I resort the entire list by RT. So if you own stocks with an RT above 1, that means they're in an uptrend. If you own stocks with an RT below 1, they're in a downtrend. For example, here in our list, we've got 3 that are in an uptrend, which means the other 7 are in a downtrend. Now, I used to teach 3rd grade, and I think of this watch list like my classroom. I could have a bunch of very well-behaved children. Their RT was above 1. But there could be 1 or 2 talking and not behaving, and where do I need to focus my attention first? Yeah, I need to focus it on the misbehaving students. If I just leave them alone, it would bring down the entire classroom. Just to kill you with analogies here, also think of these low RT stocks like weeds in your garden. You've got to pluck those weeds early before they kill the good stuff. Okay, so these stocks up here with an RT above 1 are the stocks that are doing what you want. They're going up in price. Any stock with an RT below 1 deserves your immediate attention. Those are the stocks that are potentially hurting your portfolio. You should revisit the reasons you bought the stock. If the stock's pulling down your portfolio, you should seriously consider closing that position. So the first thing you should do is identify any stock in your portfolio right now with an RT below 1. Now, let's look at 4 tips to help you determine if and when you should sell a stock. And remember, this is part of the second secret of making money with VectorVest. The second secret is to be able to read a graph. And the 4 tips I'm going to give you all deal with reading a graph. Because a picture is worth 1,000 words, and there's a lot of information you can get from the graph. And you can get that information very quickly. So to pull up a graph, you can just click on the row, and then we're going to right-click. But before I do that, let me just point out, you can also do that quick analysis we did in Lesson 1. For example, this stock here, we can see that it's fairly valued. It's got the potential to underperform a bond over the next few years. It's one of the riskier stocks compared to the average stocks in the database. It's in a downtrend, and it's got a sell rating from VectorVest. So now we want some more information. So let's right-click on it, and I'm going to go to this button here, View Stock Graph. And that loads a graph for me. I'm just going to maximize it here. All right, here we are looking at our default graph, and it's got 3 components. 2 of those components are right up here at the top of the graph, and 1 appears down here at the bottom. In the upper portion, we show the price as candlesticks, and we also have a 40-day moving average running through it. Down here in the lower portion, we have RT. And you probably see that there's a horizontal orange line, and that lets you know where the value of 1 is. Remember, RT is on a scale of 0 to 2. Okay, so our first tip to help you determine when to sell a stock is to avoid stocks that are moving down with high volatility. All right, so we're going to look at 2 things. We're going to look at the price direction and its volatility. So the first thing, let's look at the stock's price direction. So here with this stock, it's moving down over the short term. It's lower than it was like 6 months ago. It's lower than it was a year ago. So overall, just at a quick glance, this thing is moving down. That's one cause to make you think about closing the position, because there's a ton of stocks out there that are actually moving up in price. But let's also look at its volatility. I also like to think of this as the sleep at night factor. You know, can you have a stock in your portfolio and go to bed at night and sleep soundly knowing that you can wake up the next day without this stock totally just destroying your portfolio? Or another way to think about it, think about going away on a vacation. Maybe you go away for a week to Disney. Do you feel safe leaving that stock in your portfolio for a week? So if we're just looking at this stock, we can see that, you know, within a week, it goes up almost 10%, then the next week it drops. Then over here it drops from 17 to 15 in a matter of days. Then it rises back up, back down, and so on. And you can see here, it went from 18 down to about 13.50 in a matter of a month. So if you've got a stock like that that's bouncing all over, and you don't like that, that should jump out at you saying, hey, maybe I should get out of this stock and move on to something else. And when we get to lesson 4, we're going to look at how to find replacement stocks. But here we're talking about when we should get rid of a stock. All right, so the first tip is to look at its price direction and its volatility. And you'll see when we get to lesson 4 that we actually favor stocks that go from the bottom left to the upper right in a smooth fashion. So we'll talk about that later on. Our second tip is to compare the stock's price to this 40-day moving average. Whenever the price crosses below that 40-day moving average, that's an excellent early warning signal. You'll notice that most of the times on this chart, when price crossed below the 40-day moving average, it was a great time to exit the position. I mean, you could see back here was a great time, here as well. Yeah, here it did turn around on you, but just think, if you get out of it and you still thought it was a good trade and the market was in your favor, you could always re-enter it. But take a look over here. When it crossed below the 40-day moving average, here it was at 17 and it dropped to 13. So if you have a stock in your portfolio and the price goes below that 40-day moving average, you should definitely become defensive. And there's several things you could do. You can, of course, either close the position, tighten your stops. One of our other secrets to making money with VectorVest is to learn to trade options. So you can learn to buy a put as an insurance policy, and there's several things that you could do. But when you see price go below that 40-day moving average, something's not right and you should become defensive. Our third tip is to look for relative timing crossing below 1. And to see that just a little bit better, I'm just going to pull this up a little bit here. So down here we see relative timing, and you could see very easily when it goes from above 1 to below 1. When that happens, it's telling you that the stock that you own is now in a downtrend. And remember, you don't want to own stocks that are moving down. So if you have a stock whose price is moving down and the RT goes below 1, again, become defensive, and everything I said just a moment ago, just rinse and repeat. I mean, you can see right here, if I put the date line on here, you can see right here was a time where it went below 1, and then it crossed below 1 again here, and here. Any of those times would have been a great time to exit the position before this happened. Now, one of the other things that you can pick up with RT is a thing called divergences. Now, you don't see this every time, but when you do, it's very significant. And that's why reading a graph is one of the secrets to making money with VectorVest. Take a look at what was going on here. You saw a price hitting a higher high, but down here you saw relative timing hitting a lower high. That was telling you that this uptrend was losing momentum. So when you saw all these warning signals, price going below the 40-day moving average, RT going below 1, you should definitely have known something wasn't right and it was probably time to exit. The fourth tip is to never ignore a sell recommendation or sell rating. A stock will immediately get a sell recommendation from VectorVest when the price falls below our stop price. Alright, so I'm just going to take off this moving average to see it a little more clearly, and I'm going to put on the stop price, and you can see it's now this bluish line. And we've also got a feature up here, or down here, that you can click on the REC button, and it'll show you the recommendation changes going across the top of the graph. This recommendation is your last line of defense. We've seen time and time again stocks become a sell recommendation and continue to move lower after that. So you can see over here with this stock, it became a sell right there. It was at 15 and it continued to move lower after that to 13.50. So this sell rating is your last line of defense. We also say it's our line in the sand. You should ignore it only at your own risk. So again, going back to keeping things simple, it could be just as simple as managing your stocks and looking for these sell ratings from VectorVest. So we just looked at 4 when to sell tips. Let's do a quick recap. Number 1, look at the price direction and its volatility. Number 2, look for times when price falls below the 40-day moving average. Number 3, look for when relative timing or RT falls below 1. And number 4, look for when the recommendation turns to a sell. In other words, when price falls below the stop price. Always keep these 4 tips in mind when analyzing the stocks at the bottom of your watch list. With the rest of the stocks in your portfolio and any future stock, you need a way to minimize losses. Minimizing your losses is key to your success. Many think of the gains first, but you first have to control your losses. If you were to look at your trade history and just sorted it by the gain down to the loss, I bet there's probably a couple of trades there that you wish you had back. And most likely if those trades never happened or you just kind of trimmed those losses early, your portfolio would most likely be okay. By minimizing your losses, you're ensuring your trading survival. You're making sure you're able to live to fight another day. If you allow yourself to lose too much on each trade, you can only have a few losers in a row before your portfolio is just crippled. Remember, not every trade that you make will be profitable, so you need to ensure your survival in case you do run into a string of losing trades. So in order to minimize losses, you need to establish what's called risk management. Here are a couple of guidelines that you should follow. Your first guideline is to never lose more than half your profit. I'm sure you've been there. You've entered a trade, had a nice profit, and for one reason or another, you didn't sell it. Eventually, you watch that profitable trade turn into a loser. And sometimes those ended up being your biggest losers because you hold on to them thinking, oh, it'll eventually come back. Well, our guideline is to never lose more than half your profit. Now, that doesn't mean if you have a profit of like $10, you should sell if you're only up $5. But you should have a profit objective and never lose more than half of that. And Dr. DeLito suggests starting with a 10% objective. And once you hit 10%, make sure you walk away from that trade with at least 5% in gains. The second guideline is to make sure your stop prices are set to limit your loss to no more than 1% of your total capital. In other words, your stop price should be set so that your maximum loss on any trade is no more than 1% of your total capital. So let's take a look at what I mean by that. So let's just draw this out here. I'm just going to draw a straight line across with 4 columns, right? So here's 1, 2, 3, and 4. In this column, we're just going to put our account size. So account size. And let's just say a nice round number of 100,000. But when you do this, you would just put your trading account size over here. Whether it be less than that or more than that, you would write your number there. In the second column, let's figure out what 1% of that is. And this is how much we're going to risk on any one trade. Okay, so 1% of 100,000 is 1,000. All right, so that's how much we're going to risk losing on any one trade. So the next 2 columns, this one's going to be how much money or how many dollars we're going to invest per trade. Okay, dollars per trade. And then the next column after that is going to be the stop loss. So I'm just going to put the stop percentage. Okay? So let's start off with 20,000. Let's say you decide to put $20,000 of your $100,000 into a single trade. Well, if you're only going to allow yourself to lose $1,000 on that trade, you'd have to put a 5% stop loss in with your broker to make sure that you follow this guideline. Now you might say, well, 5% is a little too tight for me. If it is, well, you have another option that you could do. Instead of just walking away and finding another stock, you could say, all right, well, I'm just going to do $10,000 and invest in the same stock, but by doing that, I can have a 10% stop. And you can keep going down the line. You can say, well, I only want to put 5,000 in because that's going to allow me to have a nice wide stop of 20%. The other thing you can do is to start with your stop price and just work backwards. For example, as we talked about earlier, VectorVest provides you with a recommended stop price. So let's say you have a stock that trades at $20 per share. All right, so I'll just do another section down here. Let's say it trades at 20 and VectorVest calculates the stop price. So our VectorVest recommended stop price is, let's just say it's 18. Okay? Since this stop price is 10% below the stock's price, well, just come up to your table up here. So 10% tells you that you can only invest $10,000 in that trade. So think about what this guideline does for you. By only risking 1% of your account, you feel more control over your emotions. A lot of times emotions kick in because you're risking too much money and you're just really worried that you're going to lose it, or you get really greedy because you want more. So by doing this, you're going to feel more control over those emotions. So just always keep in mind these risk management guidelines. Following these guidelines will ensure your trading survival. A mentor of mine put it this way. He said, some people think about what life will be like when they get to the finish line. In other words, when they get to retirement. However, If people don't implement proper risk management, they never even get to that finish line because their trading account just gets wiped out. So follow these guidelines and follow those 4 tips, and you're going to make sure that you ensure your survival. All right, let's recap the major points from today, and then we'll talk about what you should do right now. The first thing is to resort your watch list by RT, so you can immediately identify those low performers. The next thing that we looked at was part of the second secret to making money with VectorVest, and that's to look at and read a graph. So we used the 4 tips to help determine when and what to sell. We then talked about how to minimize losses using risk management. So that brings us to what you should do right now. Okay? So number 1 action item. The first thing you should do is identify any stock that is currently hurting your portfolio and decide when you will sell it. Number 2, using the tips and the risk management that we talked about, put a stop price on all the stocks you currently own. Remember, if you don't have that exit point, your emotions will kick in and you'll just keep saying, I'll just give it one more day or it'll come back. So put a stop price on all of your stocks. And number 3, go back and look at the graphs of some of the stocks that you used to own. See if the 4 tips would have saved you any money. By doing this, you'll begin to gain confidence in your ability to spot stocks that you should sell. All right, moving forward, you're going to be ready to buy another stock for your portfolio. But before you go buying any stock, you need to make sure it's the right time to be buying stocks. So in our next lesson, we'll show you how to determine when is the right time to buy and when it is not the right time to buy. You'll also learn how to identify market trends and the exact signals to use to enter the market. And what we'll do is we'll move into the third secret of making money with VectorVest. I won't tell you exactly what it is, but keep in mind, you'll have an easy 5-minute routine you could do each day to make sure you're prepared and ready to go. All right? Be sure to finish your action items, and then I'll see you in lesson 3.